card situation, and that almost a half a trillion could be added by the end of the year.
Well, I have two thoughts for you. One, is there any chance? I say two thoughts and questions. Is there a chance they have broken down the increasing credit card debt by age group? Have
I
they?
have not seen anything on that detailed. No.
Because when you say that, here's the thing, and for those of us who, I guess, I'm over 50, so I'm in my 50s, so we've been there, we've done that. We know the pain, of going into that kind of debt, and it's a long time getting out of it, as compared to the pain of saying, I really need to streamline my spending right now, not take that vacation on a credit card, or not buy this or buy that, but we lose sight of that. But again, a lot of us have already been through that, so that was why that question popped in my head as you were reading those statistics.
Well, it is a challenge. I mean, I don't want anybody to lose the standard of living they desire, but when you add it and put it on plastic instead of living within your means, the compounding interest rate, and as I didn't even know there was 5 different types of rates, and of course the purchase and the introductory rate tend to be the best ones. The balance transfer, cash advance, and penalties, they're very high, and as those compound, they grow. People may never get out of it. It just continues to be a payment if we're paying minimums, not living within our standards. And again, I mean, thank goodness people only have $500 balances. The ones that have 50,000 that are living or high in that, that's amazing to me. But it does impact our ability. And I understand people are losing jobs. I understand they're looking. I understand they may be working a part-time, but you don't need to maintain your standard of living if that's what you're doing. So this is just challenges that I deal with it in our family, certain relatives and children.
Right.
Seems to be a challenge for them to learn to go through. But
I mean, you're definitely right. When we're stuck in a position we've lost a job, but just to say, hey, I'm used to going out for 4 nights, 5 nights, whatever, a week or something. There's some different decisions for sure.
Sure. Next, I wanted to update everybody on Warren Buffett's bet. If you remember, Warren Buffett made an $814 million bet into 3 home builders last month. And he recently made a statement on why he made this bet. And I thought this was very interesting. He says, hate my house, love the mortgage is a phenomenon that has decreased the inventory of homes for sale. And that means builders are going to make a killing in the homes that they make available. That's why he made the bet. And I thought that quote, hate my house, but love the mortgage. That means people are loving their rate so much that they're willing to stay in a house that maybe they're outgrown or don't like anymore or need to increase, but they're willing to stay in that situation. And for him to make that statement, we still have people that want to live the American dream, want to own a home. Right. And this country, and at least Texas, has in excess of 250,000 people moving into it every year, and it's growing. We have needs for homes, but the only place, if those existing homes don't come available, he's exactly right. The home builders are going to make a killing. Don't you agree?
Absolutely.
I mean, go ahead.
It's just different. I don't want to. Things aren't bad. Things aren't going down the gutter. I don't truly feel like these are things that we've been through. It's just the uncertainty is what keeps everything and people off balance, I feel like. But the market's still moving.
Well, it scares me to think that people are loving their mortgage, loving that interest rate so much. That means that's ignorance, because on the average, since they've been historically tracking interest rates over 80 years,
right,
that the average rate is 7.75 across those 80 plus years. And yet You're telling me we love our interest rates so much that we're not going to move as our family needs more room or downsizing or right sizing or whatever because I love my mortgage, even though I don't like my home. And people have to understand rates are never going to get back to 2.5 to 3.
Right. Absolutely.
I mean, I guess this fantasy that rates will ever get back to there are not going to happen, and it's not going to happen in my lifetime, I think.
Well, that was my next point. The next layer of it, if it does, is that none of us will be here, so it won't matter.
Yeah. So I mean, it's scary, but this man, I mean, he knows how to make money. He does not he doesn't take emotions into it. He's very methodical about his approach, and he's willing to put almost $1 billion into a bet of home builders. So he's got something, and it should tell us that if you're looking to move in, if you're looking to grow in an area, that home builders, it's going to be rare that there's an existing home available. You might have to go to a home builder or do your own construction, buy your own land, and get a custom builder and come in and build your own home. Is something of I'm doing many of those, and so that's always an opportunity that new homes, whether it comes from a builder or a construction solution that maybe you finance it, you're able to find that dream home that you want or need.
Right.
So, any other final takes on that? Wanted to kind of, because I really think that's an interesting, again, I'm going to say it, hate my house, love the mortgage. What an interesting quote, where we're always trying to say, like the house, date the mortgage.
So here's the thing. It's tough. It's got to be a tough pill to swallow when you say, okay, we're downsizing. We're gonna get rid of 2 bedrooms we don't need. Oh, by the way, our mortgage is going up, honey. You know, that's when it comes down to looking at it that way. It's like, well, okay, maybe we're gonna sit tight.
And I know that I'm doing that in myself, but it's
absolutely
there's certain reason. And I'm not saying people should move if that feel like they need to, but if they have to, if they need to, I mean, a growing family, not somebody that is right sizing because they're empty nesters now, but a family that's growing that needs more space. Is that such a thing? Because I'm helping people understanding their blended rate. If you're so focused on the mortgage, but yet you're paying credit cards like we're talking about at 25 to 30%, let's talk about your blended income rate and your debt, and talk about, okay, let's blend those all the way across. You sell your home, you pay off some of your other debt, and you only have your mortgage. Now your total household interest rate is higher on your mortgage, but it's lesser than what the blended rate was before, because some people are living in 17, 18%. If they pay auto, they're paying credit cards, they're paying student loan, they're paying all of these things. Their blended rate is all those types of cost of dollars could be higher than just doing a mortgage.
Wow.
So that's an analysis that it's individually done, but those are things that I try to help people realize, because sometimes they're actually going to make better money than what they're doing now. So, okay. Wanted to move on to 3 important data points that I thought were something of importance that people need to know about. As of January 2023, the mortgage industry had 177,000 loan officers. As of this month, or the end of August, we have 99, and it's forecasted to be right around 80,000 by the end of the year. That means changes are happening. That means loan officers are either leaving the industry or companies are right sizing. Ours, we laid off in August 350 employees. Now that took us down from roughly 1,800 down to 1,500, but we're still performing all the duties, all the stuff, but the business wasn't there to support those positions anymore. And I'm sure that's taking place in a lot of other companies. Plus, a lot of companies are closing.
It absolutely is. As I talk to other companies within the industry, so no, you're not assuming. You are correct. It's
So
happening.
what do you take away from that? Just that one data point of loan officers and the number of them. I mean, for me as a loan officer, I'm happy because there's the piece of the pie. I have a better chance at a larger portion. But does this mean a challenge or an issue for people to get financing, for people to get at least a pre-qual or a look at how they could possibly buy a home? I'm wondering how that's going to impact in certain areas. North Texas, where we have a good number of loan officers, but in some spots, there are not that many. So availability, I think, becomes an issue for some people. Would you agree?
Yes.
So, I mean, are you seeing this sort of thing in the title work?
Well, yes, because we work together, and you know that old lovely expression, it all rolls downhill. So when we're seeing competitors merge offices and close offices, there's no doubt about it. Fortunately, Fidelity is the largest underwriter in the country, and we're sitting tight right now, and at least in my division, in our area, of keeping everybody together. There's still enough business, but it has become more challenging, and just in both our industries and in the real estate industry in general, it has grown so drastically in the last decade that this is probably just some of the leveling out too.
Sure. And again, I mean that it's just an interesting data point. I guess I want people to understand as realtors out there looking for loan officers that are quality. I think the industry's, they're going to trim the fat, so that those officers that are still available, still in the industry, probably are going to be of the top-notch brand. Now, another data point to bring into that is the same one on the realtor side. Mm-hmm. January 2023, we were at a historical high number of realtors, 1.6 million. This is reported by NAR. And since that time, NAR has forecasted that we will drop 15% or 300,000 realtors across the country by the end of the year. So we'll be at 1.3 million realtors. Now, you and I recently just did a FSBO versus realtor, or for sale by owner versus realtor show with Welcome Home Radio. You can find that at welcomehomeradio.net.
Right.
But what do you see as the input of, okay, title, loan officers, lending, realtors? Is this an impact of technology, and that people are trusting technology so much that they don't need, and that they are doing so much online now that those resources are underutilized? Is that a concern?
I wouldn't. And when you brought this portion of this topic up, I was smiling. You couldn't see me, but I was smiling because, no, I don't think it's an aspect of technology. I mean, everybody picks and chooses what works for you and what works for your business. But I think a lot of it is personally just so many people go get their license and they go, I'll sell to my neighbors. I'll help my relatives. I'll make some money. This isn't an easy business. And it is running a business. You don't sit on the couch. I've been doing this is my 30th year. Actually, in October will be my 30th year in title. So the reason I say this is so many people think they're going to get their license and they're going to sit on their couch and let the phone ring, and they're going to go show property and sell houses, when that couldn't be any further from the truth. It is a business, and it's hard, and you have to work nonstop. This isn't a part-time job where you can make six figures as far as real estate agents. So I think it's a natural ebb and flow of those who just didn't find their niche, or they just never really fully put their game plan together to make it stick.
So it's trimming the fat a little bit more.
I think that was that's a perfect expression.
But what does that mean for brokers? I mean, if they don't brokers aren't recruiting and have a stable of performing realtors, that means some brokerages are going to be closing the doors, just like companies in the lending area or title, correct?
Well, Yes and no, only in that it may be a little easier for a broker. Some lending institutions can. They can really shrink down and not close. You can run the office out. You can run a brokerage out of your home if you had to, and your agents are working from their homes remote. Now, that can be a little more challenging, but even right now, many of us, as far as title companies, we have a meeting room or a boardroom or something, so a broker can come in and they say, "Hey, can I have my meetings with my agents and my partners here?" Absolutely. You know, so I wouldn't think the brokerages, they don't necessarily have to close their door. They can function independently even over a time period if they needed to before they maybe blossom back out and open up an office. So,
And again, we want to remind you this is interactive. If you have a question, please put a Q in front of it, send it in. We would like to respond and give you our thoughts, as well as love your insight to these data points that we're sharing today. So we talked about realtors, we talked about lenders. I want to bring one final data point to this discussion that I think is interesting and is not stated very well out there, but it's a data point I'm not sure what it means. So I'd love your input.
all right.
Last August, the number of canceled contracts was the highest it's ever historically been. 16% of all contracts that were signed were canceled before closing for, I mean, many reasons, I'm sure. Cold feet, appraisal was too low, interest rate not accepted, whatever it may be. 16% of those contracts committed to closing in August did not close for some reason, and that is the highest it's ever been in the industry historically. What does that data point mean to you, Jeff?
I'm I'm really surprised by that being in August. I thought I assumed, don't you? I love that word always. I assumed that that would have been more possible when the rates really first made their jumps, because I know quite a few people, for example, who were under contract with a builder,
Yeah.
and they may have walked away from 10, 15, $20,000 because all of a sudden your rate you had locked in went from 4.5 to 6.5 or 6.25, and all of a sudden your mortgage just jumped, so that we had a lot of people bailing out on those type of contracts. So
Yeah.
I would have expected it would have been during those first months of the
Sure.
of the rate jump. So why August? I don't know, and that sounds like a pretty big number. I don't know what the average has been, but I don't know of anything
It's in the
specific.
single digits on the averages was around 5 to 7.
Oh, see, that's a tremendous jump, in my opinion.
I'm
Maybe that's
Go ahead.
sorry.
Oh, go ahead.
I wonder if maybe that's a correlation of people going, oh, wait a minute, or their lender saying, well, wait a minute, you've just racked up your credit card bill another $5,000 or more. I wonder if that comes into play here.
Oh, well, I'm sure. I mean, just like people closing, homes that the interest rate went up because they were buying the max that they could buy at that time with that interest rate there. That higher interest rate took them out of their debt to income ratio, and he's lost it, or it became so uncomfortable they didn't want to commit to it. And I understand that. But
Right.
it just is interesting that, okay, August is normally a high closing month just for the fact that kids, they want to get kids into their school district so they can go to school.
Right.
So I understand that the changes may have not, but we also have to remember in August how many people lost their jobs.
There you go. You just hit the nail on the head.
Well, I don't know if I hit the nail on the head, but I do now just remember the many layoffs that we've had across the nation in large firms, the sizing cuts from anywhere from 2 up to 12, even 33% in some organizations have
Right.
cut their jobs. They're not hiring. The freezes are out there.
Right.
Um, that's why I'm so frustrated by the economic forums that are reporting we're increasing jobs every month. Yeah. Here's the equation. Somebody loses a full-time job and they have to take 2 part-time jobs to fill that to make ends meet. And you're counting that as a positive instead of realizing that poor person is having to work 2 part-time jobs
Mm-hmm.
and probably not having medical insurance. So it bothers me because I think it's an indicator of people being responsible, saying, look, taking on this home mortgage, even if the rate is what the rate was at the beginning, it didn't change. But because of the financial situation in the family, the core family, that they backed out of that commitment because they were being responsible.
Hmm. I don't know. It's tough, and there's no quick end in sight. It doesn't appear in my eyes. In
Well,
my view,
I'll do for our next time together, I'll do some more research on this and look at job losses starting in August, September, try to
okay.
give some indication. But that's where my sense of a feeling is that we are sugarcoating a pill that is very sour to the world, and that's why people are willing to live on their. Look, everybody's getting a job. That's great. So I'm going to live on credit card debt for a little bit till I get a job, and then I'll focus on paying that off. And I think we're going down a spiraling. Hey, there he is.
Right at the end.
No, we're not at the end. You've got a few points, but at least look at that shiny face.
Man, that shiny head's more like it.
Well, hopefully Mark can decrease my screen, please, and increase yours a little. But it concerns me that we're not looking at the true data points, and it could be a challenge if people are losing their jobs and they've taken the responsibility not buying a home because they could not actually afford it. Are we, lipstick on a pig?
And you froze. And that's okay. Um, I think what you're saying though is exactly right. I mean, we're just seeing the repercussions of what's happening in the economy and the industry, and not just our industry. It's happening across the board.
I'm here.
Yes, gotcha. But it's happening across the board. It's just not our industry as far as the layoffs. So when we talk
Am
about
I the one that froze now? Hello, hello.
I can hear you.
Oh, okay.
I can hear you. You were froze, but I could hear you.
I'm just concerned that the reality, the economics, we're not looking at them all. And again, the media is talking like we've been keeping rates up, falsifying data, or at least changing data from historicals and not letting it impact rates in such a way and the economics. And here's Blair's opinion, and this is it. You can agree with me, disagree, that's okay. But what happens next year? What's happening next year that's major to this country?
Oh, a nice little voting situation comes
A
into our lap.
presidential election. You're right. And I have to say, I think this last quarter is going to be setting up for Bidenomics. How successful? Because that's when they're forecasting to see rates get better. And look, they're going to tout, look at all the good things that's going on. But yet we've been pilfering, putting situations, keeping the Fed interest rate growing where they're not free.
Rate. What about our debt? The national debt is.
I actually hope the government does shut down, to be perfectly honest. I would love to see a shutdown of our government. That would be a savings to the American people. So,
well, I think if you recall, I think in a lot of ways with the 08, with everything that happened, and I'm not comparing our situation out to then by any means, but I think in general, what happens a lot of times, we listen to enough rhetoric and things coming out of the certain houses and places, and then we, the American people, we pull up our bootstraps and we do it ourselves. We just finally make changes, we make adjustments, or we say, you know what, you're not going to scare me anymore. To some degree.
I hope that is the case in American people, that they are not allowing the fear factor of things, that we can work through this. We have to communicate. We have to talk. We have to share ideas, share solutions. But you also do have to look at yourself saying, hey, I'm spending too much money. I don't make that much money. I can't live in a deficit every day, every month of the year. Otherwise, it impacts my total year. Otherwise, it can impact my total process.
Right.
So, oh, I do have to ask. I had this down. How's your fantasy football team doing?
It's chaos already. Well, I do more pick'ems this year. In the past, I've done 2 or 3 teams actually, but this year I've slowly have slowly tired of giving my money away, even though I like talking smack with everybody.
Oh,
And
you like
my
talking
wife,
smack.
my wife recently goes, "Oh, you're doing that again?" I was like, "Yeah, I'm going to, just because I got my buddies in our group." But she's like, "Well, what are y'all spending this year?" And I told her, and she goes, "How many years you been doing this?" I was like, "Hey, I won 10 years ago, so
Yeah, remember me
you
10
know,
years ago.
you have to have hope."
Well,
So
I got a league at our company and that I'm on our team, and uh, it's funny. I don't score the most points, but so far I have everybody scores the least amount of points when they play me.
that's
So
perfect.
I'm
We'll
sitting.
have to keep that up all season, though.
If I can maintain that what do they say? Defense wins championships. But
That's true.
so you had a few points you wanted to share as well.
I tell you what, let's talk about one. One I might save till next time because we may consider having somebody join us on that next time. So,
Okay.
but yes, just one of the things I want to bring up that the Texas property tax relief, and let's just chat about it because I'm not going to pretend I have all the answers on it. Okay, I'm still learning it. And by the way, if you don't know, that vote is still coming up uh, in the next voting this fall.
I think this is a great topic. I love that you're bringing it up. That's awesome.
That bill is that's on the docket, and there's a couple of things that are happening
Well,
within
tell
it.
them about the bill. Tell them what's on the bill for them as homeowners, please.
Well, it is they've spent essentially over 12 million is what they're stating in reduction of the school property tax rates. And this also works for business properties as well to a degree. Now, that's where I'm saying I don't want to promise here's the number, but I will say the number they're saying for homestead. If you claim a property as your homestead, you're going to get a reduction of $100,000.
Wow.
So
Wow.
that's a big number. And
That's almost $2,500 if you have a $500,000 home.
so I'm hearing numbers from 750, maybe some people might get close to $1,000 in their relief annually. So, but I think that 750 range is more on the average
Sure.
per homeowner. But I'm it's they're doing something. They're trying to help us, and I mean people are excited about it. I mean it's going to be a benefit without a doubt.
And it will be prorated back to this year's
Mm-hmm.
if it passes, which get out and vote, get out and vote, get out and vote. Please take that right that you have been given, that has been earned through blood, sweat, and tears of
Absolutely.
others. Please vote. Vote your opinion, vote your thoughts, vote your heart, but vote. I get frustrated with my own kids that they don't get out and vote when, I mean, even, school boards to local, state, and then of course federal. Federal's the one that get out everybody next year, presidential elections, so forth. But we need to be voting every time. And yes, those votes are coming. And if you want a homestead exemption, an addition, some savings, Texas is trying to help you out. Let's get out and vote this one positive.
This is Bill 785. It was passed in the 88th legislative session recently, and actually they did some other things. We can still talk on the tax relief, but there's some other things happening there as far as for homeowners, and especially in Texas, how it will affect. And I'm going to use this term, and then let's shelf it because I have somebody I want to bring on next week maybe to discuss it. But that's the aspect of the geothermal aspect of having an endorsement on your title policy. So I'm going to highlight it, and then let's go back to see your face is exactly what I'm learning and what I'm reading. And sometimes I start reading all these bills and legislative stuff, and my eyes and they get heavy when I'm reading all that. But
Well, I should have had it last night with that my insomnia till midnight.
yeah, this would have done it for you. But essentially, look at right now, we have endorsements that's issued on a title policy protecting or specifically covering an aspect such as mineral rights and things. Geothermal is the heat from the ore's crust, from the center of the earth, right? It and they're now being able to draft and take some of that heat as the earth has been becoming warmer, as they say. So it is not a mineral; it is a resource, right? That they can go pull this heat and make use of it. The thing that's being is if you currently have, let's say, a gas well, a lot of properties in Texas, you have gas wells on them. Maybe not our folks here locally in Lot and Block, but and some of them do that with the fracking that was done a while back. Now that I make that joke, but if you have an existing well, let's say you have a lease in place with a gas and well entity, they can come in and say, "Hey, we already have this lease. Now we want to draw instead of the gas, we're going to draw the heat, the geothermal out of it." And what are most people going to say? Because it's most people
Isn't
are going
that
to
a
go,
new lease?
how much? Yeah, it hasn't said yet. This is going to take a little while to get through it. And it's just like, the mineral and the endorsements from mineral and separating minerals from home ownership of the property. That took a while when it happened many, many, many years ago, because they separated it and made it two entities. So
Yeah,
all this boils.
let me put it in layman's terms of what you just said there. When you buy a home, you're buying the top layer of property, and that's
Surface.
it. The mineral rights below that home, the home where you live, you do not own, you do not have, and you will not have. They will not be sold with your home. And therefore, what he's talking about on mineral rights and having that right, you need to be out in West Texas or somewhere where mineral rights are additional to the property being purchased.
Right.
So, because you can actually buy acreage and not own the mineral rights on those acreage.
Most of the time, you do not own those mineral rights. And if you wanted to say, "Hey, I want the mineral rights for this property that I'm purchasing," your real estate agent, your title entity, your title company, that's not things we handle. You have to find a landman. They chase the aspects of the mineral rights. Now, do we sometimes have referrals? Yes. But in essence, you're going to have to pay a landman to know who owns those minerals currently for you to go approach them to, give an offer. So thank you, Blair. I appreciate that. I was just jumping way on into the story, but this is a new bill. We don't have an endorsement for it at the moment. So if you're just going to be buying any type of land that has any kind of access or easement, and Blair's not just West Texas. We're just northwest of the Metroplex where they were doing a bunch of that fracking. So those wells are there under some lot and block neighborhoods. I don't know how many, but they're there.
But they don't, that's owned by somebody else, and they've separated that. And you can see the pumps, you can see the actual, all the setups there, but that's always interesting.
Well, let's talk more details about it next time, because like I said, there's so much that's still coming out on it. But just if you go to buy a property right now and there is an active lease or something of that nature, just ask more questions. This all comes back to who owns those surface rights. If you have a lease in place for an existing well, they do. Whether or not you can work with someone else or that entity is a secondary lease, I'm going to assume it is, but just at the moment, there's no protection in your title policy as far as an endorsement for it.
Wow. I look forward to that. And yes, we can bring on guests. We'll have some people on. I'm already thinking about a home builder that I would love to have on, and maybe a chat. Again, guys, appreciate your questions. We're going to all you have to do is put a Q in front of it. Let us know. You can find us at welcomehomeradio.net, as well as on Facebook Live, YouTube Live. Now, I got to bring up one final data point for you, Jeff.
Okay.
Don't be shocked.
Uh-oh.
But here in North Texas, starting up, I want to let everybody remember, September 29th through October 22nd is the largest state fair in the country. Will be starting right here at the fairgrounds in Dallas, the Texas State Fair. Come on out, enjoy rodeo, music, racing, football, and of course, Midway fried foods, everything. Fried everything.
I'll be there.
You going?
I'll be there. Not every day.
Every day?
No, I was joking. 1 day's plenty.
Oh, my wife and I were talking about this, and we missed the Balloon Fest here in Plano. That's always a fun little weekend, but wasn't able to do that. But we haven't been to the state fair since the last time we went to the Texas OU weekend. I'm never going to go on another weekend. I refuse to go on weekend. Friday, Saturday, Sunday, no. But we want to go down there to go see the dog shows. Of course, go see some of the rodeos. She used to barrel race, so she wants to go see some of the racing. But of course, you got to hit the Midway fried food. I mean, fried everything, fried Oreo pie, fried peanut butter and jelly, they have them out there. It's just a lot of fun.
I went almost 20 years without going. In the last 3 years, I've gone again, and I've gone with the same group of people. So we kind of create our own fair day as far as from work, and go have a good time. So
love to go if you let me know. I don't know when. As long as it's Monday through Thursday, one of those days.
It's usually a Tuesday. I don't go during the week on the weekend.
Yeah,
that's why I said
let me know when you're going. My wife and I might meet y'all there. Would love to do it.
That'd be awesome.
Anything else?
No.
Well, it's been a good chat. I think we've got a lot of data points. I've got some studying to do for next time. But if you have a question, you have something we want to talk, go there, put a Q right before it. Ask your question, ask your statement, give us your thought. What's a topic you want to talk about? We will bring on the experts that we know into this because, again, we're here to help you understand what's happening in the real estate market, how to get into it, maybe how to do investments, maybe understand when might be a better time to buy. I don't know. Or, hey, what about the new construction loans that are out there? What are the benefits of you doing a construction loan instead of letting a builder? Is there a benefit to that? So look forward to talking with you. I am so blessed to have you, partner. I'm Blair Thomas.
Jeff Duffee. Oh, Blair, wait, let me interrupt you real quick. Great job with me not having a camera and you fighting through carrying things on your own. By the way, that was smooth, my friend.
We gotta thank Head Monkey Butt. He does all that stuff. Technology. I hope you figured out your camera situation so it doesn't.
I did.
Everybody wants. Hey,
I'm learning new tricks every day. See.
Well, thanks again. God bless, and have a great rest of your day.
See you soon. Thanks, Blair.